Hi, and welcome to Homes and Loans. My name is Ben Lang, Metro Detroit Realtor, broker owner at Remax, the collective agency. I also have with me today Eric Ashko with Neo Home Loans. Eric and I come out every single Friday and bring you the latest news on what's happening with mortgages and also what's happening with the local housing market and the national housing market. Today, I do want to talk about a surge in inventory locally, Metro Detroit. Southeast Michigan. So stats just came out. We only have April data. We don't have the May data because May just closed out. But I will tell you the homes for sale went up from April of 2024 to April of 2025. There was a 15% increase year over year. So a lot more homes for sale in April of 25 versus April of 2024. Now, I'm expecting that May data to be even higher. I have been watching the market, and I've seen throughout the month of May, roughly 3,500 to 4,000 new listings hitting the market almost every single week. I have not seen those numbers since prior to the pandemic. So we are really seeing a surge in inventory right now. So bottom line, I mean, more homes equals more competition, and that essentially means less leverage for sellers. So if you are thinking about selling and waiting until the end of this year, you may not like what the main numbers are about to reveal, but we will have those next Friday. So stay tuned for the inventory. Now, there was a bit of good news this week. Rates did drop, and I think they had their biggest drop in over a month. Is that correct, Eric?
Yeah. So rates did come down some, which is really good. It's really on the back of a really weak ADP jobs report, where ADP reported there was only about 30,000 jobs created compared to what was forecasted to be. Usually it's well over 100,000. So really showing some weakness in the market. Now it's funny because literally been like 5 minutes ago, the BLS, Bureau of Labor Statistics, released its jobs report, which shows 130 jobs reported. But it's funny. There was a Wall Street Journal article that came out yesterday where the BLS basically admitted to guesswork, and that due through kind of antiquated ways of calculating this and job cuts, that there's a lot of the unemployment numbers that are now being guessed at, which is funny because we have these systems like ADP and Zillow and all these great sources that can aggregate this huge data in real time. And our government, which is the single most important entity in moving the stock and bond market, which drive rates, is guessing. So going a little nuts there. But yeah, I 100% agree with you. Like, if you're a seller, it might be time, to stop waiting, because it feels like the market is headed to a little bit more of a balance, right? Where it is not so, seller strong to where you're going to get these huge offers over asking, and you really need to readjust expectations accordingly.
Yeah, 100%. And on paper, we're still very much in a seller's market. We're at 2.1 month supply locally, at least locally. Nationally, it's a little bit different in some of those cities, like in some of those states, like Arizona and Florida, where the market was really hot. Their month supply of inventory is really increasing very, very rapidly because there was so much growth there. But in our local market, we are only at 2.1 month supply of inventory. The threshold from seller's market to buyer's market is 5 to 6 months. So we're well beyond that threshold. But what's interesting is that 2.1 is 16.7% higher than just last month. The month supply of inventory. So we are on a trajectory or on a path towards a neutral market territory if this trend does continue. So again, still a seller's market on paper, but emotionally and psychologically, I think that power is shifting quickly.
Yeah, and I think that It's one of those things that depending on what mortgage rates do, the only thing really keeping it in balance right now, I feel like are still the high rates and the unknown, right? So when I speak about the unknown, I mean really the tariff issue and the ongoing headlines, right? Between our administration and everything that's being said in the news right now, the markets are really in a wait and see type of mindset right now as far as what they want to do with rates. But everything economically is pointing towards a slowdown, which means you either have to lower rates prior to the slowdown to avert it, or you're going to get into it and then you're really going to have to lower rates because things are going to start heading south into recession territory.
Yeah, you mentioned the slowdown. It seems to be because of this inventory, because the demand's a little sluggish. It seems like buyers who act now can really negotiate those buy downs, those repairs, those price cuts. I think once the rates dip,
Yeah,
that competition will return.
right. We're just going to see a flood of buyers coming back in the market.
Flood of buyers, right? So
It's
if you are a buyer, I think this is your moment that you've been waiting. You've got more inventory, you've got less competition, and you've got a little bit of rate relief. If you're a seller, I think you got to get ahead of the curve.
yeah.
So you got to price your home into the future, right? So because the market's shifting a little bit downward as that inventory is rising. Um, I do want to talk about this because there were several articles, and I think it was New York Times. I think it was a lot of reliable sources came out with an article this week that said, "Hey, it's for the first time since 2020." Buyers now are higher. The number of buyers is higher than the number of sellers, and while we can calculate the number of sellers and get an accurate number there, that data was that all of these major sources are using was from Redfin.
Yeah.
And Redfin is calculating active buyers in the market by clicks and website traffic, which is totally unreliable. But so many like CNN and New York Post, like all these
It's clickbait,
huge.
baby. It's clickbait. Hey, that's our press for you, right? Whatever gets you to listen or tune in, they're gonna say. So yeah, you're 100% right. We kind of dove into the Redfin numbers, and one. So I would even say that they didn't 100% calculate sellers correctly because in their numbers, they're taking the number of homes on market, but they're including the homes that are pending, which if they're already pending, they're basically sold, right? So you can't really count them. And then, yeah, like you said, I mean, we're going off clicks. I mean, how many people on Zillow are not serious about buying? They just like to go look at houses and see what their neighbor's selling their house for, right? So yeah, I think it was one of those things to get themselves some high headlines, um, and maybe not overly transparent in how they were doing it. But yeah, I think it does also play just to what we talked about though, Ben, is the market is starting to tilt back a little bit more. We're not to a balanced market yet, but 100% we're at this little equilibrium. Like I said, I think we're going to go back towards sellers maybe a little bit once these rates drop in, let's say 8-9 months. But I think you hit it right on the nail on the head. It is time if you're a buyer to get off the sidelines because this is your window. This is your opportunity to get in, maybe pay a slightly higher rate for a little while, or do a buy down so that you can bridge the gap between now and when these rates come down because they're either going to come down to avert a recession or they're going to come down because we're in a recession. And those are really the only two options. I mean, the things that are holding it up right now are the big beautiful bill, right? That the administration's been touting. People are waiting to see what's in that and what's not in that, and and really for the Fed to get off their hands and do something about it. But you know, that was my soapbox.
Yeah, it'd be interesting. It's so interesting. I mean, I don't think any of us really know where it's going. We don't have a crystal ball. We can only look at the current trends, and um, some data, but for the most part, everyone's guessing. But I will tell you, like, I've also seen locally, I've seen way more price reductions than I've seen in a long time. Price reductions are skyrocketing in Metro Detroit. Just in the last 7 days, there was about 2,500 price reductions. That buyer activity really dramatically slowed starting that first week of May. And now we're seeing homes that would have sold in just a few days that are sitting for a few weeks. So,
Hmm.
how does that relate? I mean, is it because mortgage applications down? Is demand
We're
down?
Yeah, no. So demand's down. Mortgage applications are still down. And I don't get the professional analytics that you do, Ben, but I see the same thing because I'm one of those consumers. I jump out on Zillow and just see what's on the market, right? And there's a whole lot more little red dots all over my map when I pull up Zillow than there used to be. So no, I 100%. I think it is a slowdown as we're in this wait and see. Rates, although they've ticked down this week, they were up the week before. Overall, they were up in May. So it's, we're just at an affordability crossroads where houses, until rates come down or price and basically prices stabilize a little, there's too many buyers that are close to being priced out of the market or just saying it's not worth it to me at what I'm going to end up paying every month.
Yeah, yeah, 100%. So, I think in summary, I think we've been maybe expecting a shift that historically the market shifts every ten to 12 years or so.
Mhm.
Our last big shift was in 2012, which would make us due for another shift last year, actually. And we've got so many economic unknowns, so many unknowns everywhere, right? But this May data is showing us that the shift is here, at least psychologically and emotionally, and the start of a trend. And if that trend continues, we are looking at a market shift here.
Yeah, yeah, super interesting. It's the only sure thing is that times are changing, right? Right.
Times certainly are changing. Thanks so much, Eric. We'll see you next Friday.
Talk to you later.